All. Um, Good afternoon. We will start with the session while others join in. This is a session specifically on the PFM and wealth management templates, and we've received several queries. So we thought we'll have a webinar dedicated to that and discuss more about the templates and the guardrails for SEBI entities. And before we start, this is the outline of the agenda for today. We'll give you a brief of what FIUs framework is, what are the guardrails and the templates, and what does it mean to the users. We have pages of documents on all of these. What does it really mean in terms of implementation, the do's and don'ts of it, and some recommended practice. In the end, we'll have the Q&A session. We have with me, is Ruchi on the call? PNE? Ruchi is also. I have with me Ruchi, who is our lead for AI adoption and focused on specifically on the SEBI entities. Many of you would have already interacted with her. So she is also on the call if you have any questions related to these use cases. One disclaimer we have to give upfront is this session is not about how you design your product itself. We are not helping you build your product features. We are only talking about what these templates are and what these guardrails are. And it should not be considered as a proxy to any regulatory or compliance check you might have to do with your own organization. Just because something is mentioned here or in a template does not override completely the regulatory requirement. These, as you know, Sahamati has works in the form of participatory governance. These are rules or governance that the community has built for ourselves within the ecosystem. It cannot override the regulatory or the compliance requirement. So if you feel there is a conflict in what we say versus what you know about regulatory compliance, please write to us and we'll see how best we can modify our codes to reflect the regulations and other compliance requirement. So if you are building a product and want to understand more about these templates, it is best to understand the limits that these guardrails set and work within that within your organization. In case these limits are too constrained, it's not letting you build your product properly, or you find any other limitations, you can write to us. The feedback we will give a fair use ID at the end of the session. If you have general queries about how AI works and what you can get, what kind of data you can get and data types, etc., you can use the info@samati.org.in and our team will respond to it. There's a Q&A session at the very end. Only if all your points are not covered with our slides, then please drop a message and we'll address it at the very end. I'll try to wrap it up within the 25, 30 minutes so that you get additional 15 minutes on time with the Q&A. And that's the structure. So introduction to Samvati itself. If you're here, then I'm sure you're familiar with Samvati and the role it plays in the AI ecosystem. We work mostly on getting participatory not only participatory governance and also a common implementation across the ecosystem. We want to drive the performance of the ecosystem for the benefit of the customer. One of the key things that on a governance standards that we do is to ensure there is responsible data usage. And for responsible data usage, we have built something called as a fair use framework, which sets out the reasonable limit of data collection and data usage for a given use case. And the use cases are discussed in various councils. So this is how the timeline of the implementation itself is. Initially, the focus was more on getting more traction on the participants, while as more and more joined, then we realized there was a need for healthy scale up and not just the adoption across sectors. So noting that our governing council, which advises us on key matters on the ecosystem, they advised us to form a fair use committee focused on the usage of data within the ecosystem. It took us an year and a half or two to finalize the templates what we have. We have about 15 templates in the ecosystem today. Each template is broad enough to accommodate various use cases within the regulations, and we have ensured that the upper bounds are also lenient enough. At the same time, they are have certain constraints so that all data is not um, used beyond what is required. And since then, since we started work on this, the DPDP rules also has come into place, and there is a timeline for DPDP implementation also. So keeping in that in mind, we hope the fair use templates and guardrails will act as additional supplement information for you to be able to implement the wealth management in the PFM use cases that we will discuss today. So the way the framework is built is FIUs have the primary responsibility of implementing the templates, and the AAs who are actually the ones who are receiving the consent request and showcasing it to the customer to approval for approval, they are the first level of checkers to ensure each each consent request that is coming through serves the purpose for which it is being showcased to the customer, and it meets the fair use templates and the other guidelines. FIPs are actually the second level of checking who will be working on in case there are incoming requests that do not meet fair use limits for some days. Some days, FIPs have retained the option to be able to act as a second level checker. Well, they will check whether the templates are indeed as per the the consent requests are indeed as per the fair use template, and if there are deviant requests, then they're blocked. Okay? So what is a template in itself? It sets the upper bound. What do we mean by upper bound? The maximum of data that you can take under a given use case, which means we are not telling you how much to take, we are taking. We are telling you don't go beyond these limits. Restrict your usage within these limits, and these are not mandatory. When we say 45 per month, doesn't mean you have to take 45 per month every month. They're not mandatory, they're maximum values. It's a community asset. Like I said, we formed various councils and committees of users themselves who are using these use cases for using AA for these use cases. And they brought us the knowledge of compliance in the regulatory requirement, the business requirement, customer behavior, all of that. And that is how we were able to curate the templates. And these templates in itself are not purpose codes. Now, purpose codes are 5. They are given by Rabbit, published by Rabbit, and it is part of the technical specification of how the APIs are designed. In that itself, they have given 5 purpose codes. Thankfully, we have 101 and 102 separately calling out PFM and wealth management. So it became easier for us when we were building the templates. We did not have to think of the most feasible purpose code to assign to those templates. We were able to use Rabbit codes. And these are not suggestions for any specific license type. While we have suggested the broader category of manufacturer and distributor, I'll discuss that later. Samati's role is not to suggest any specific use case for any license. The responsibility of managing the licenses and the use cases within that lies on the FIU. What it means is the FIU should have a regulatory requirement to seek statement from the customer and or a business requirement under their own license charter, and through which they should be pulling the data. Just because somebody is eligible to be an FIU, FIU, by the way, means registered and regulated under 5 FSRs, the financial sector regulators. Now, just because you fall under that does not mean you have the right to take the data. You only have the right to participate in AA, the right to take the data depends on your own license. And that license, again, how much can you take depends on your specific use case and your compliance, your policies, and the charter within that license is what dictates. Fair use templates cannot be taken as a proxy in itself for what to consume from the customers. Now, focusing mainly on SEBI entities, like again, there is a disclaimer. It says, please validate your charter alignment before taking any of the templates or using any of them. Selecting the template ID, applying these attributes is all under the FIU's responsibility itself. Even AA wouldn't what your license allow you to do, right? So based on different use cases that have come to us, um, we've made distinction in the templates. And we've tried our best to accommodate the known regulations and the common practices to ensure it doesn't break the business requirement as well as the regulatory requirements. That said, if there is any feedback, you can always write to us and say, that is how we expand the various templates also. Once we get feedback and say it constrains and it's not clear for certain data type or usage or things like that, we do accommodate that later. So today we have CT004, which is for wealth management, and CT008 for personal finance management. Then CT010, which is FNO service onboarding. While the template name refers to FNO service onboarding, the regulations we've referred to is actually the onboarding for derivative segments. So it includes all, not only futures and options, it includes commodities and other derivatives, which fall under the derivatives definition of SEBI. And then we have CT040, which is a generic template. It was done across the cross-sectoral council. It was finalized for any FIU who might have a requirement to cross-verify the account. You might be doing KYC and you might want to verify the customer. You might be doing some kind of onboarding or some regulatory requirement where it is B2C and you're cross-checking the accounts with even B2B also to some extent in this case, can be cross-checked with the account details that are available via AA. And we have CT043. This applies mostly for SEBI entities where the employees are covered under the PIT regulations, the prohibition for insider trading regulations. So if you have process in place, this is mostly a B2B, as in this is focused only on employees. The first three are actually B2C, facing the customers. This is mostly your employees only, and the data that is accessed is of the employees. And the last one is monitoring for credit rating agency, and this is designed very specifically for credit rating agencies who wanted to monitor the GST and data of the entity, which is the issuing entity of the instrument that has been issued by the entity. Now, today the operations of CRA is little limited, given that only GSTN is available for certain categories of data. But otherwise, once we have wider coverage, maybe there is more information that CRAs might want to access. So today's session, while these are all templates that may or may not be used by the SEBI entities based on their license, we are focused only on the first two, CT004 and CT008. Sorry. Yeah. Along with that, there are certain guardrails. If you're implementing any of our templates and taking data, there are some 6 to 7 codes which are highly relevant for these use cases. And also in general, our code of conduct has about 60 codes today, which applies to, there are some codes which are for FIUs, FIPs, AA, all three, and some which are dedicated for FIUs, mainly revolves around the FIUs responsibilities. So I would recommend highly to visit our website. I'll share the link along with this. Visit our website and take a look at all the codes and ensure that you're complying to that. These codes are specifically what I've pulled out are relevant for either PFM or wealth management templates, or any of the templates that are recurring in nature, something to do with SEBI entities. Those are the ones that I've included it here. There are others you might want to discuss later. We'll come to the do's and don'ts of this later, but just to give a brief overview, CC020 is for FIUs to know that if you are making any request to depositories or RTAs in a day, more than once, you will get the same data that you had received in the previous day, because the data that is available from depositories and RTAs is as of the settled data. So it will always be as per the last calendar day, right? So irrespective of how many times you pull the data, you'll still get the same data back. So it is better not to request for multiple data requests within the same day. And CC027 speaks about how the presence of a template and the eligibility of someone to act as an FIU does not itself default any FIU to be using PFM. You have to work as per your charter, as per your license, to ensure that you're taking data only as required under your regulations. And CT028 is, while PFM is a slightly broader term, it includes various personal finance management, budgeting, and even when Revit clarifies, they say budgeting, reporting, and others. So it is quite broad. Just because somebody is helping with budget does not mean you take the same consent and then start processing the customer for some other product journey. Like you might start a loan journey post that, but that product or service is completely different from the PFM itself. So this code specifically restricts use of PFM for other product journeys, and that's what we've clearly defined. We've given examples also, so you can look at them. CC030 is where you have a recurring consent for some reason. It can be PFM, or it can be even employees monitoring, any kind of monitoring or recurring consent. The data fetch, we request everyone to have the data fetch on the incremental data, not pull the complete history every time. Set up the system such that you only take the data that you need after your last data pull. And then CC031 is about clarifying to the customer that there are two different data ranges. Now, I'll come to why we are talking about this when we are looking at the templates. 32 is about overriding consent on top of AA consent. So this is not permitted. We've come across cases where even before someone is redirected to AA, in the main screen they're told, by entering into this space, you declare that you give data for our holding company, you declare that you give data for our usage for all promotional activities, offers, solicitation. They have a blanket consent or disclaimer at the very beginning, or maybe somewhere in the disclaimer, or somewhere in the privacy policy, you have add additional caveats to the data access, right? But that should not be done. The consent of AA in itself is like a contract. When you say the data will be used for a specific purpose within that consent, it can be used only for that. It can't be used for an overarching or a blanket consent somewhere. So we are clarifying it again. This is anyway as part of AA master directions from RBI, but we are clarifying again in the code here. And the last one is for bank account verification. I mentioned that CT040, which is a cross validation template. There you are allowed to validate the customer's profile. In that case, only one account is allowed. It's also practical. If you take two different accounts and then you have conflicting information, you don't know which one to validate against. So it is always best to ask the customer to give one record which is good and take that record to cross-validate. So these are the main guardrails. Now coming to what wealth management template is for. Here we are clearly working on the wealth management services itself. Now, wealth management services are defined by SEBI It is as per the regulations of SEBI. There are various licenses. There is RIA, who is the investment advisor. Then there is portfolio managers, who some of them have the advisory charter and some of them don't have. They only manage funds and things like that. So there are various licenses. Wherever you are the manufacturer of these wealth management services, you are a product owner or the producer of a investment product or wealth management product, you are considered as the manufacturer, right? That for those, we have included wealth management services, and it is very clearly not for distribution. What we mean by distribution is there are a lot of licenses who are permitted only to distribute these products that are managed by either portfolio manager or any of those issuers that we have. And those are not included in wealth management. They are actually while they provide distribution services, they are not clearly maintaining the same set of uh, data integrity or data security that is being made for wealth management producers. So in this case, we had to, while the template was being finalized, this distinction was made. And these are the set of upper bounds that are there for wealth management. Now, in wealth management, you get access to all the FI types. The purpose code that you use is 101. I'll have to first highlight that the purpose text has to be very clear. We have given it as to provide wealth management or advisory services. This is actually wealth management and advisory services, where wealth management services are allowed. In case you are not allowed to do advisory, for example, there are some PMs who are not allowed to do advisory, but they only have to do discretionary portfolios, non-discretionary portfolio services. Right? For them, they can skip the word advisory. But for everyone else, you will have to show a minimum of this information and also can expand it to more information on your own product, and to ensure you're very specific to the use case that you are pulling the data for. And we've received time and again complaints from customers saying that I didn't know I was signing up for this service. And it is best to showcase in the screen itself. I'll have an example later in the slide to show the customer that they have to, what is the data being used for. And if you know DPDP, your consent needs to be very specific. It has to be free and it has to be unconditional, and it also needs to be informed explicitly to the customer as to why they're agreeing for data sharing, right? So this purpose text is very critical in conveying that information to the customer. Now, FI types, you have all of these FI types. These are majority of the insurance and the deposit and SEBI FI types. All of them are available. Profile summary transaction, all of them are again available to provide a 360-degree view of the customer. And this is a periodic template. What do you mean by periodic is you take the consent once at the beginning of the service, and then you're able to pull the data on a recurring basis for an extended period of time. It's not one time the way we see in lending and others, where consent is taken only to pull the data once. Here, data is available more than once for a certain period of time. And maximum frequency that is allowed as per this template, the SEBI entities were okay with 31 per month, because based on the poll we conducted with the council members, this was the rationale: 22 per month, accommodating for the working days in a month, and an extra pulls for the beginning of the service, where you might want to take. If you look at the number of day trains that you have 20 years of data available, historic data. So 20 years of data can't be pulled in one single pull. You will have to pull every data pull will give you only 2 years of data. That is how the SEBI FI types have enabled the data pull. So you might need 10 pulls per month in the very beginning when you're creating the customer's profile. That time, to accommodate that, as well as the work week and maybe a little bit of failure here and there, it was agreed to be 31%. Now we'll soon revisit this number if there is a need to change the frequency in the coming days. The maximum data that you get for non-SEBI FI types, which is like the insurance and the deposits, GST and everything, is only the last 13 months. And for SEBI, you have 20 years of data, which is equivalent to what you get in the MF Central, I think. Consent validity. Wealth management services typically have a tenure of annual renewal with the customer. In line with that, we've maintained it as 1 year. Maximum data life is 1 month. Considered how much time would you need to generate these reports or these analytics, given the raw data that you receive from AA, a maximum of 1 month is available for data usage. Now, how do you show it to the customer? This is actually not part of FIUs template, but we already have UI UX guideline, that is a customer experience checklist. So to help you visualize this better, these are the information that you show to the customer. And you, for assuming you are taking the consent on 17th of November of 2024, this is how it looks. And you are giving as much information to the customer to be able to make an informed decision. Similarly, on personal finance management, this is for those who provide dashboard service, those who provide insights and some kind of, if you have in your charter, to be able to have that fiduciary relationship with the customer as a distributor or in any other form, but not as a fiduciary relationship in terms of manufacturer, but any other role. Then if you need to prepare dashboard and show it to the customers, then you can utilize this PFM template. Now, there is no set definition for personal finance management specific in RBI or SEBI. There are various different definitions depending on the licenses. So we would highly recommend you to look at these your own license charter and make the distinction between whether you are a manufacturer or a distributor, and then take up the template. In PFM, there are 45 times per month is a frequency, the reference. Okay, before jumping to frequency, let's look at the purpose text. It is for to generate the insights based on the overall finance. So you get a 360-degree view of the customer, and then you are giving them insights into their own finances and provide incidental recommendation. This incidental recommendations can be like nudges or recommendations, like say you're short on insurance, or you are, it is better for you to reduce your risk, or you are, I'm giving you some known examples, not exactly the same thing, but you will do their budget and say the customer has wants to go on a trip, and then they have a spending pattern, and you say you can't cover your expenses for the trip within your spending pattern, improve your savings and things like that. Those are all the insights that you're providing to the customer. But if you say go and get an insurance, then that's a different product offering itself. There's a different process for collecting the data. The underwriting of insurance, there is a different template. So please don't assume that when it says recommendation, it's some sort of a open blanket consent where you can solicit customer for any and every use case. If that was the case, there was no need to take a consent, right? You could as well generally take data from them for everything. This is very specifically for helping the customer with their spending pattern, budget, and other reportings. If you look at the Rapid language, it says very clearly other reportings. So if you want to offer them a product, or you want to, it's not for solicitation for sure, it's not for cross-sell and upsell. And if you want to make any recommendations, and then there is a product journey post that, the consent for that has to be simple. The data that you take for that very specific product will be completely different from what you are doing here in PFM. So there is, I'll talk about why this is. There are difference in what we call as one purpose, one consent. I'll come to that later. So these are the parameters of the PFM. 45 per month, you get all the FI types, and then The purpose code is 102. 45 per month, there is a detailed description in our website as to if you click here, you'll get more information. We'll circulate this in any way once post the event. 45 per month, why it is and what it is for is mentioned here. But if you have a product that does not require 45 per month and you want to reduce it, it is up to you. You can reduce it and take only as necessary. Your compliance team needs to be okay with the data that you are collecting from the customer. And then 10 years of SEBI data is available. That was considered sufficient to generate lifestyle analysis and things like that. Maximum consent validity is 1 year. We are working with the various licenses and use cases on the PFM. And some of them we realized did not have a agreed timeline for renewal or things like that. Once a customer signs up for the service, then it goes on until they say stop. So, knowing that there is no end to some of these services, the council agreed to have 1 year as a maximum consent validity that you can take for PFM, meaning that after 1 year, you will have to take a new consent asking the customer to access their data. This is very much similar to the KYC and other regulations that you have, right? To ensure there is a continued interest in your product. This also helps to know, weed out weed out any customer who is an inactive customer. The maximum exposure you might have to their data might be 1 year, and you might so there are discussions on active and inactive customer. We'll come to that later. So the maximum available here is 1 year, and this is how you show the customer so that you're clear on what you're offering to them, and they are also clear on what data is being uh, found. So now, why are we saying wealth management is different from PFM and PFM is different from other consent journeys, etc. Right? Because the ecosystem is built on a principle called as one purpose, one consent principle. What this essentially means is for you to be aligned with DPDP or any of the directions, regulations, you need to understand that the consent has to be very specific for a very defined purpose. So if it has to be defined purpose, then it can't be the blanket purpose what you would take otherwise, or you will see the disclaimer in somewhere outside of the AA ecosystem. You might see like once you sign up for a service, they say we'll take your data for everything. It can't be like that. It has to be specific to the person. That's why we have around 15 different templates, and the templates are only increasing as we have more and more use cases coming into the ecosystem. Now, in this, just 1 second. Yeah, and in this, yeah. So, the purpose expansion also, a single consent can't be used for multiple activity. In lending, if you see, we split lending into three different activities. It is underwriting the lending and then monitoring the borrower, and then in case he becomes a defaulter, then monitoring his balance to for recovery and collections. So there is very clear distinction on what each activity entails. It's also to ensure customer protection and customer awareness on what they signed up for. Now, please don't merge too many products or more than one products within one consent and then look at the single consent for PFM as a proxy for everything that you can do. No, you cannot do. There is a certain limitation. How do we distinguish between PFM and wealth management? We've discussed a little bit on manufacturer and distributor, but let's look at what is a close, what is the key point that apart from the distinction that we mentioned here is the core offering that you give. It's basically an understanding of finance and doing personal finance management kind of a planning, all those awareness and budgeting and everything comes under PFM. Wealth advisory, portfolio management, and any kind of investment decision and where core is actually advisory and falls under the SEBI definition of wealth management comes under WMS. And here you get 30 years of data in WMS, whereas in PFM you have 10 years of data. This is the main distinction. I think I've already mentioned this, and again clarifying it is don't cross over the consent purpose. Don't mix those consents or the different use cases and take a single consent. Better to take separate consents on this. Now the do's and don'ts of these recurring consents, right? Like some of it I've already covered. The basic thing is data minimization. All the points that we cover in all our discussions is to ensure that you take only data that is relevant for your use case and for the customer behavior or the customer's product that you're offering and things like that. So take separate consents, be as explicit as possible, minimize the utilization. If your product is for 6 months, why would you need a consent validity of 1 year, right? You can take a 6 months validity consent. If your product is for 1 month, whatever you're offering, and then you want to renew it for beyond 1 month, then you take another consent. And strictly restrict your usage to the stated purpose. You can't be giving data to the holding company. You can't have overarching, consent that says I will use the data for something else, solicit you for some other product or some other offers. Please don't do all of that. And don't reuse the data that you got from PFM journey for some other product. Whatever the customer is not aware that you're using it for something else, right? Which means you didn't take the consent for that. So please don't use it. And if you were to use the data for need data for some other product, better to take another consent for that product specifically. For example, if it's loan or if it's insurance or whatever product you might have, ask them to take another consent because a department responsible for that also, in the audit trail, now the DPDP is in place, it becomes very difficult for you to show how you got the permission, where you use the data, and how you dispose the data, all of that. So it is best to take separate consents. And then don't have overarching privacy policy we discussed. Don't combine consent flow with the different data product with different product or services we mentioned. AA per se, AA journey, once someone is on the AA journey, they're there for only consent. Now there is one more don't, that is don't plug in your product in the AA journey. Some of you FIUs might be co-creating AA journey with your AAs, and you might be embedding it in your own app while the flow is in your control and also in AA's control. Please don't add survey or add solicitation or add opt in and opt out of service. Somebody giving a consent for PFM does not mean he's opted for that service. The service opt in and opt out has to be with the product. And then when they opt in for it, opt in for a feature, let's say a dashboard, and then they say, okay, I'm ready to share the data, is when they're redirected to AA. It shouldn't be the other way around. Don't confuse someone agreeing for giving the data is an default opt-in for a service. Please educate them about your service and then take the data needed for the service. So clarity of the purpose and the discipline and usage is the main foundation in these templates. Again, from a code of conduct perspective, we just discussed briefly on what you can take. The do's are restrict your usage only to the regulatory charter, take specific consent, and take only the incremental data. Clearly showcase the difference between the date range for SEBI and non-SEBI. Otherwise, what will happen is you will show 20 years for deposit and the customer will freak out and they'll not give the consent itself. They won't understand why you would need your bank statement for 20 years. You won't even get bank statement for 20 years. You only get 1 year to 2 years of data. And then we have the don'ts, which is like we already discussed, not overriding and not taking PFM data as a proxy for some data somewhere else. All your design choices should be based on these boundaries. Please respect the codes that have been finalized on this. Then some more recommended practices we would say is have a mechanism in your own app to identify inactive users. There are users who come once on your app, then they uninstall the app, but in the backend you have the consent that keeps pulling the data, which is of no use for anybody. It's a strain on your system, it's a strain on the AA systems, and also it is of no use to the customer because he's gone beyond it, and you have additional exposure for a customer who's inactive. So have some checks. The common checks that we've seen is, there is a forced action from a customer saying that yes, I'm using the dashboard or things like that. Or if you see somebody is not used at all your app for a considerable period of time. One of the apps that I know of does for every 30 days. If there is no action, then they stop using pulling data for that customer. And some of them have enabled triggered pulls. Only customer will say, I need to view dashboard, and then the data is pulled. Whereas some of them have standard pulls every day, irrespective of whether customer is asking or not. So it's best to always have some kind of customer engagement where the customer is confirming again and again that he needs the data, or not again and again, but at least to know that they're active. It will be good for you, and provide them an option to ability to delete and purge the data when they don't need the service anymore. If they're signing out from the service, or if they've uninstall, you don't get a queue. So best to see is when they're inactive. Ask them whether they don't want the service. If they don't want, ask them if their data can beyond the minimum requirement, DPDP wise also. And any sensitive data. This is one of the key things in order to ensure customer protection. I'm sure you are also as protective as your customer as a AA or an FIP. So customer himself gives the PAN number, right? And then you're again in the dashboard showing the PAN. Why it doesn't add much of a value because the customer knows his PAN. Even if you want to show that which account this dashboard pertains to and want to show some bit of a PAN, maybe mask it. What will happen is any unintended, access to the app by some third party might at least safeguard the customer's personal data, which is like the PAN, date of birth, address. No need to showcase. If there is no need, then don't show it. Keep your dashboards as minimal as necessary as possible, not minimal, as necessary as possible for the customer. And if you're providing any reports on that and the reports are downloaded, add additional checks so that the customer either has a password or he's confirming that he's the user and he's able to download it. And don't display the raw bank statement as is and call it a dashboard. We've seen this at the very beginning, thankfully, not much. On those we've had questions, but at least um, every now and then someone is curious to know whether they can share the bank statement as is. It's best not displaying the raw bank financial statement as is to the customer. That's no service. There has to be some value add to the customer, right? For you pulling the data, and then you are also investing time and effort in doing all of these. Please make sure there's some meaning to the customer, and as much as possible, try to secure the customer's account. There are implementation. I won't go into the UI UX part of it too much, but there are apps which ensure they already have multi-factor authentication of the customer before they provide them PFM kind of service, because this has so much information of a customer. So all the checks are done already. They would already check the SIM and the device. In the beginning itself, they will ensure that the PAN is a valid PAN. There are verification for PAN as well, right? So these are good practices. As please implement as many as possible at your end. Even in the back end, I think one of the things I missed here was in the back end, if there are any data the storage that needs to be segregated, please isolate the data as per the purpose so that you're able to provide that audit trail when asked. So these are some of the screens. We're just saying keep it as informed as possible, and then don't mix the purposes. If you see this says we will do insights and PFM and also provide you offer for loans and things like that. That's not correct. And here is an example of where there was someone wanted to solicit. They came for loan, but later somewhere they said, "Do you also want dashboards?" and then give them a consent for dashboard. Wanted to do this, but luckily we said, "Please don't do this. This is not kosher with the regulatory requirement." And then auto approval, not providing reject button. All these are also not allowed. So these are basically the things that I wanted to cover. Now let's look at the question. Any questions? Okay, there are no questions. We have 10 minutes left. Let me know if you have any question and we can go specific to that. You can raise your hands or drop the question in the message box. कुछ नहीं है ना प्याली?
No, Geeta, not as of now.
Yeah. Abhishek Pansal, you have a question, you can type it out or you can unmute yourself. Awesome.
Hi, yeah, hi Geeta. So I would like to understand for the PFM model, you said there should be not any product or services that should be, endorsed in the consent journey. So what do you mean by that? Like if the consent has been done and where would we want to recommend some, let's say mutual funds or for that particular consent that has been taken. So I want to understand on that part.
So, mutual fund per se, it depends on the license again. Abhishek. If you're licensed, if you're a manufacturer, you would as well do wealth management, and there you yourself are a mutual fund house, you will be able to provide
Yeah,
specific
yeah, we are a mutual fund house.
advice
Yeah, we are
based
an
on that.
AMC.
Yeah, if you're a mutual fund house, you have the wealth management uh, template, and you go ahead and give the advice as per that. But if it is a PFM and a general, you're a distributor and then you want to guide somebody on mutual funds and things like that, then there is a separate pipeline there, right? They have a, how does anyone subscribe to mutual fund? They'll have its own KYC process, its own onboarding
Yes,
process and everything. They'll have to take a consent separately for that.
understood.
Just because you have data here doesn't make it like you bypass that process entirely and say I have a data, so I'm okay to do your get you on board onto a product. For them to sign up for the product or go through that process, it's a different one. So better to take a different consent there.
Yeah, understood.
Do
Hello,
you need?
am I audible?
Yeah, you're audible.
Sorry, you finish then. Actually, I'm having a query. You finish, then I will talk. Sorry.
Yeah, no problem. I'm done. Yeah, I'm done. I was just reading the other questions. We can.
Yeah. See, myself, Ranjit Menon. I'm having a query, ma'am. See, we are a mutual fund distributor. We are a insurance corporate agents. We have got a license from IRDA. So we have some clients. Okay. So we are a mutual fund distributor. We are an insurance corporate agent. Can we empanel a account aggregator and can we use this AA services to our customers under PFM, not under wealth manager, under PFM?
So, as I said in the very beginning, Samati is not allowed to recommend use cases fitment to a license. We will not be mentioning that. But coming to your question on, you have two licenses and your customer base is same, you're saying. But in our ecosystem, the way we recognize each entity is based on separate licenses. For the simple reason that um, one regulatory, like IRDA monitors the insurance activities, insurance related activity, whatever you have. And then you had another license, sorry, I missed. It is RIA license under SEBI, right? So there the requirement for that license is completely different from a regulatory perspective and a compliance perspective. So if you were to offer the same service to both the customers, then you are merging two different compliances into one. While you are given for the same address, for the same registered address of an organization, you are given two licenses. The activity and the responsibility within those two licenses are completely different. Now, when they are different, taking
Geeta,
consent for
Geeta,
yeah,
am
Ruchi?
I'm sorry to interrupt.
Yeah.
Basically, he's asking about two different licenses. One is not RI, one is the mutual fund distribution license, and the other one insurance broking, corporate agent license in the insurance side. So,
Yeah.
long story short, mutual fund distributors cannot be implementing account aggregator because they are not directly governed by SEBI. This framework can be implemented only by those entities that are governed directly by SEBI, IRDA, PFRDA, and RBI. Mutual fund distributors come under AMFI regulations, so they cannot implement the framework, which means that, for example, your entity is ABCD, and that entity cannot use mutual fund distribution license to do any kind of use case, implement any kind of use case to the customer. The other license that you have, insurance corporate agent license, because it comes directly under IRDA, you can implement account aggregator framework using insurance corporate agent license. There are entities in the ecosystem today. If you go on our website and you look at entity participants list on our website, I'll put the link over here. You will see there are corporate agents, insurance corporate agents who are already implemented the account aggregator framework. So using that license.
And Ruchi, what license the use case they implement is up to their compliance. Just because someone else is using does not mean that they get approval from anybody. This is each organization doing their own internal check, their own regulatory check, and agreeing to do this is the service that I want to provide, and this is the template that I want. So, dono hai at the same time, we have to also say there is a difference in each licenses and their usage of AA itself. Sorry, I cut you because it should not be considered a proxy that someone else is doing doesn't mean your Samati says you can. It just means that their compliance has agreed to go ahead with PFM. MFD can't be, like is what Ruchi mentioned. Insurance brokers are corporate agents are part of the ecosystem today. Yeah, they have various use cases.
Hi Geeta, I just had one question. If my users are using for personal finance management, I just want to offer them for loan aggregation and all, do we need separate licenses or should we need?
Akshay, when you say customer, I would like to understand what is your role. Are you an FIU or are you because Ranjit, I think, is a TSP and
FI.
Not sure what Abhishek was. You're an FIU. Which license?
SEBI RIA license as of now.
Okay. Does SEBI RIA license allow you to give loans?
I don't think so as of now. So that's why I asked.
Yeah. So whatever is your regulatory charter, please do as per that. It's we won't be able to tell whether you can use one of the templates as per your license or not. But what I was referring to previously was banks today do PFM and they are also allowed to do lending, right, as per RBI. So there was
that's
one.
Why I asked the same question.
Yeah. So are you a bank?
No.
You're an RBI. So bank, can a bank do call PFM as a service and then start lending? No, that's two different things. You've clearly called out. We had a session, 2 sessions with lenders recently, and in both we've clarified that PFM does not mean it's an okay to solicit for loans or cross-sell for loans. And in your case, I don't think loan is even a question because you're an RIA. I don't think you can even offer loans. It's not part of your charter. Every license has a master directions or a master circular issued by the regulator on what they can and they can't. It is best to refer to that and refer to the compliance team before you pick up the templates.
Extremely sorry, ma'am. I'm in between. I'm lost Ranjit Meno here. I'm sorry, actually, I have not heard your reply regarding the mutual fund distributor license.
I'm just clarifying. Are you from a TSP or from FIU?
I'm from a NBFC.
NBFC. Okay.
Yeah. NBFC with insurance corporate agents license.
Okay, you have all 3 licenses. You have license as in MFD. What Ruchi was saying while you dropped off in between was a mutual fund distributor is not part of the AA ecosystem today because they're not registered with SEBI. They're only regulated by SEBI, but they're registered with AMFI. So today they're not part of the ecosystem. So that license may not be, that process what you have may not be able to access a pipeline. For corporate agents, we do have on the website, we do have several corporate agents who are live in AA ecosystem. The use cases that they have implemented depends on their own license and their compliance. So you can refer to that and you can check. Samati per se cannot comment on whether there is a use case allowed for your license or not. The only distinction that we had to make was in I think the credit rating agencies clearly for credit rating agencies. That is one. And two, this wealth management and PFM, there was a lot of confusion. So we had to separate out the users from manufacturers and distributors. So distributors were classified under PFM. Manufacturers who actually do the wealth management as specific were put under the wealth management. That's how we were able to distinguish. Any other question? So I'll quickly also share screen, just 2 minutes of your time on to show where you can access. You're able to see the code of conduct here. This visible, yeah. So in our website, if you go to the main menu, you have yeah. You have FIUs template library and you have all the templates that are available today, all the limitations set within that. And then under FAQs, you have questions on FIUs questions. This is under FAQ. And if you go to our resources, which is under Knowledge Lab, the resources also has a policy section. So any relevant released by the respective regulations on AA, we have published it here. You will get access to that also. And our own circulars and advisories are available under the same knowledge hub. It is available here. For code of conduct, which I was referring to, if you go to this, you will have various versions of code of conduct. There's one more version that is ready for release, 2.1. We will send a circular to everybody. And this is the 2.1 that I already have open, but yeah. So all the codes of conduct are given here. So this is additional reference for you. And last thing is GitHub has the details of FIUs, FIUs rules, which is applicable for all of you. Like we have A redirection guidelines, we have FIUs implementation guidelines, and then we have customer experience guidelines. All of this is available in public domain. Everyone can view. So please do look at that and ensure you're aligned with it. That's it, PLE from my end.
All right.
Yeah. Thank you all for joining. If you have any questions, the email ID is fairuse@samati.org. I'm just leaving it here. You can write to us and we can either expand the templates to the specific needs of your organization if it doesn't meet, or if you have any clarification or questions around the existing templates, you can write to us. Thanks, Ruchi, for joining, and thank you everyone for joining.
Thank you, everyone.
Thank you, everybody.